the crypto market was down 80% last year. The NASDAQ was down 35, 38% last year. So the markets have been trading on the forward-looking part of the economy. So everyone's like, well, the economy's slowing down. Why is the stock market down? Not down 30% right now. Well, it happened last year. And so what I'm now seeing is my forward-looking economic indicators saying, well, the bottom in growth will happen sometime in this quarter and then should start picking up afterwards. So the markets have been trading that. That's why it's been such a good start to a year. Crypto spring, for example, has been going on. So if I look at, Bitcoin's up 68% and Solana's up 130, that's a pretty good start to a year. We forget that because we feel miserable because it's still so far below all-time highs, but that's how the cycle works. And it's been forward pricing this for a while. I think people get very confused by that. Now, markets aren't always as forward-looking, but I think the market understands that recession equals more stimulus. So they start pricing not based on where the economy is today. Normally, they'd be maybe 3 months lead indicators on the economy, but they've been a lot longer, as far out as a year. I mean, don't forget, most of the markets, the NASDAQ and crypto bottomed in October. ETH was actually earlier in June. So they started seeing the change in the liquidity process back then. And again, people are scratching their heads because they don't realize why. We all understand how disruptive crypto is and how much productivity it can unleash from the financial system and a number of different ways. But that's just part of the equation, along with AI, robotics, and all of the other EV, space, all of this stuff. Things are moving faster than we can comprehend. And these things are all connecting with each other because AI is driving the robots. If you look at what is a Tesla car, it's a robot with AI.
Right.
So that's why this acceleration of things, the exponential age, is a really, really big deal. So I first started investing in Bitcoin 2012, 13. I bought it at $200, and I think it's worth. I did a calculation on stock to flow and said, I think I wrote the first ever macro strategy piece on valuing Bitcoin, and that became very well known at the time. I said, listen, this could be worth $1 million. So I said, look, it's a $200 asset that could be worth 100 grand. That's going to be the best investment anybody's ever going to make in their entire lifetime. So I bought it then. And I sold out in 2017 at about $2,000, which was much earlier than I should have done because I got confused over the forking and all of this stuff. And I didn't trade my plan, which was you just hold on. I'd already had a 87% drawdown. I was like, fine, I don't care. But I look back and on paper, it sounds like I traded well. I sold out in the big rally in 2017, bought the sell-off in 2020. If I'd have just held my original position, I'd have been 5 times better off. I'm like, and if I just use that long-term log trend, and every time it gets to the bottom of the log trend, if I'd have just added, I'd have been 25 times better off. So I'm like, okay, we have to think about these long-term trends in a different way, particularly these logarithmic, exponential trends. So this time around, I decided I would just do nothing. So I just held everything, and I started adding to ETH and Solana in June, and then again in October, and then again in January. So that's all I've done. And then I've done a bit of switching as I've started to look, okay, what do I think will outperform in the cycle? I bought a bit more Solana versus my ETH, but that's it. So I don't trade. I don't do anything. I used to try having a basket of crypto. Just generally speaking, all markets follow the same kind of risk curve. So let's say you're coming out of recession. Usually what happens is treasury bonds do well because interest rates are being cut, that kind of stuff. And then what happens is investors want to take more risk. So they might go into corporate credit and then junk bonds and then emerging market junk bonds. That same cycle actually appears in crypto. It's exactly the same cycle. So what happens is early stage, crypto spring, nobody's sure. They buy the safest asset, Bitcoin outperforms. Then liquidity starts coming into the market. They start getting more comfort. They move out into ETH and some of the other larger caps. And then once liquidity is flowing, everybody's confident, it really flows into the alts. And so that's exactly the process by which I think it works and will continue to work in this cycle too. There's a lot of activity on Solana. There's a lot of people building. There's some great projects. The speed of Solana is, indisputable. And then we've got Firedancer coming at the end of the year into next year, which is a complete and utter step change for blockchains. So that takes Solana's potential TPS from 65,000 to 1.2 million. And I see Solana as really one of the only other chains that really is looking at the mass market adoption of cryptocurrency. Different chains have different purposes, I think, or narratives, but that's Solana's. And if the Firedancer goes well, then okay, that becomes a big deal. So that's why, I'm very bullish on that, because as you know, each wave, the larger tokens do less well each time.
Yeah.
Because they have more holders already, more is priced in, the economic activity just becomes a rate of change game. So the rate of change of ETH was the big one for the last cycle of the major tokens. For this one, could it be Solana? Maybe I'm wrong, but that's my idea here. Of course, there'll be tons of others that do 100x. I'm just not good enough to figure out what those things are. That's too difficult a game. So I just play in that very big bucket and just think, how do I allocate amongst those? I actually think it's going to be everything, everywhere, all at once. So what I mean by that is I think there's several layers of adoption that is being built by teams right now. One is the finance system, payments, right? We're seeing everybody from, all of the payments platforms to stable coins, that there's a lot of payments architecture, CBDCs, who's going to go first? India's building, it's out. Singapore's building one, China's building one, the Europeans want to do it, the UK wants to do it. So we know that's coming. That's all on blockchain. And then we're seeing the rise of the institutions building tokenized money market funds, people like Franklin Templeton. And stuff like Firedancer and Solana may be giving opportunities for the finance system to use it in broader ways. So we're seeing the finance system get involved. The finance system itself is going to be investing in the space. So we're seeing pension funds. I just interviewed the guys from Texas Teachers, for example. They're investors in the space. They were pioneers. We'll see more of that. I think stable coins continue to grow. It's basically a tokenized euro dollar. It means anybody in any country can get access to dollars. So that's a very big deal.